So welcome back to another review, and here we have a special follow-up video. The last review we did was here at the peak, and the trader since then said that he has finally passed his funding account and he has secured a funding account, and he would like another review from us because the first one was really helpful and you can see the big improvement in his performance. So we're gonna dive into his journal, see what we can find, and then help him make the next steps and take the next steps in his journey. And we have Moritz.
Hello.
All right, so let's get into his data. And in the first review, it was a purely mindset related review because by digging into his trades and his performance, we noticed that the biggest problem for him was this mindset. He was not taking trades that he should. He was taking a lot of suboptimal trades, and there was a lot of FOMO in his trading. And he said after the review, he has changed his approach. He has become more confident, and yeah, it reflects in his performance, which is really nice. So let's see what we can do now. 32% win rate, still not high, but that shouldn't be an issue as long as the average reward to risk ratio is good. The wins are almost, not twice as high, but almost twice as large as the losses. It's a decent ratio, and you can see it gives him enough to trade profitably. I want to go back to the trade comments because in the last video, we saw that his FOMO was a big problem. And FOMO and early entries still are an issue for the trader. What we can do is maybe let's take a look at how he has been doing since. So we did the review at the end of 2024. So if we only review the current year, we should see where we are. 5 trades on FOMO, 4 trades on mistakes. Early entry, not too much anymore. Just a slight loss, so that seems to be definitely improvement. This equity graph also, just looking at what has happened since the first review, big jump. A little bit of a drawdown period in the beginning, but he recovered. Looks really decent.
Mm-hmm. Does this trader have the tilt meter unlocked?
Yes.
That would be interesting to see over time. Okay, yeah. Can you show it with the overall date range?
Yep, clearing the filter.
All right.
Even back then it was solid.
Yeah. Okay, so he's following his process well, but he's just taking those FOMO entries, which he has stopped mostly now. Okay.
Let's take a look at the risk distribution. It wasn't a big issue. This one was here the last time as well. And when I looked into the data in his last review, this was a trade where he was almost passing his funding challenge and then he wanted to pass it in one go. And then obviously this happens as always, right? Yeah. But no new larger than usual outliers, which is good. It means his risk management is on point. That seems to be very good for the trader. What I really liked about his journal the first time, and he kept it up, is the note taking here. So every trade has a note, and for the most part, it's really helpful because you get a little bit of extra information. So he cut a trade. And what I noticed, because I looked into the trades briefly, he does a lot of trade management, moving stops, cutting trades, and also jumping in and out of trades. So that's probably something we need to look into in this review. Let's go to the trade management. That's typically where you see a lot of areas for potential improvement. We've been doing a few transformation calls now with the new Edgewonk transformation program. And very often when traders nail their entries, this is where there's the next step where they can make a lot of improvements. Here, there is, the way it looks now, the potential performance is clearly well above the actual performance. This would indicate that he's doing a lot of things wrong in his trade management, which means cutting winners too short in 99% of the cases. So that's definitely something we need to look in. But I looked into the trades. There's one trade. I copied the trade ID. We pull it up. And I made a video yesterday on the YouTube channel for Edgewonk explaining this OTP field, which is the one that unlocks the trade management. So here we can see OTP hit is ticked with yes. This means the original take profit was hit before the stop loss was hit. When we look at this trade, I think we can see it here. The entry was here. he went short. The price moved against him, and the price would have hit the original stop loss before the take profit would have been hit, right? And this means this trade needs to be ticked with the OTP no and not with a yes. OTP no means the price would not have reached the original take profit before the original stop would have been hit. And this will skew the data for the trader, because the way Edgewonk picks it up now is that he made a trade management mistake. Edgewonk will now see this as if the trader wouldn't have managed the trade, he would have made a bigger profit. But actually, this is not the case here, and this will skew the data. And this is very dangerous when your data in the journal is incorrect, because it then leads you to wrong assumptions about your performance. And then obviously you're going to take the wrong conclusions from it and then change your approach in an ineffective way. So I would recommend, and we did this in our transformation program, go through the trades. We have not too many trades. We have 100 trades. Some don't even have the OTP hit ticked. And the good thing is the trader has screenshots for all of his trades. So you can just go through your trades, see if the no, and for the most part, those are correct. I looked at them. There are just a few where he needs adjustment, because I believe the trader will see still that his trade management shows that he is underperforming with his management approach, just the way the comments are added, a lot of micromanagement of his trades. So it would still be interesting to see if the potential performance remain above the actual performance, indicating problems in the trade management. But it's probably not going to be as drastic as we see here.
Yeah, it's usually the trade management is one of the biggest pain points for every trader. So
yeah,
I'm pretty sure even after he corrected the data, there will still be a lot of potential for improvement.
Yeah, and we talked about this with the other traders in the program. Once you nail your entries, because most traders spend most of their time with the entries, they don't have a real trade management plan in place, and they are then just doing it emotionally on the fly. And most of the time, it's not the right decision for what should be done. This is something also, right, that you're very big on.
Yeah. Yes, totally. It's one of my favorite features in Edgewonk. Anything like related to trade management, because I said it yesterday in one of the transformation calls too. You can take a coin flip entry, and then with a good trade management strategy, you can still make money. So if you really nail this, fantastic. Yeah. So stop focusing on the entries now for this trader. I think he got those down except for the FOMO entries, and then go into your trade management and improve those yields and improve your break-even management. That's where the real money then is.
And I will make a separate video on the alternative strategies, but there are some on our YouTube channel. What you do here basically is that you choose a setup that you're trading. Edgewonk will pull in all of the trades that you have taken with this setup. It shows you how much R multiple you made, and what you can do then here, pull up the trades, you go to the screenshots, and then assuming you trade maybe a 2-to-1 reward to risk ratio with an active management approach, you go through the screenshots and you ask yourself, how would this trade have played out if I didn't manage the trade? Or if I used a 3-to-1 or a 4-to-1 or maybe even a smaller target, and see how that would change your performance. You go here, you enter the profit that the trade would have generated with a different target strategy. And then you can very, very quickly see if changing a target approach would have been beneficial. And that way you don't have to go through the much longer process, and a much longer process when you go through the live markets or even doing a full back test. You can do this. He has now 9 trades for this setup, for example. He has, even here, 35 setups. Maybe need an hour, maybe an hour and a half, and you have the results in front of you with all the trades that you've actually taken. Is it such a big time saver? And it shows you right away, is there a better way for your trade management or for your exit strategy? And exits is really where you then go next, right? You are a very, very big fan of experimenting with exits.
Yes, absolutely. Yeah. It doesn't matter if it's tighter stops or removing risk faster or widening your take profits. All of that is so important to boost your risk reward, because that's where you really make a difference in your profitability. It's much easier to play around with that than trying to improve your win rate.
Right. Yeah, that's what we said yesterday. If you have two choices, right? Improve the win rate or try to get your average P&L up. But once you have nailed your entries and you don't have a lot of FOMO entries, there's not a lot that you can do about the win rate, but there's still so much that you can do on the P&L to boost the average trade value. And that's most traders unfortunately focus on the win rate, but we try to communicate it more and more that this is actually the way to go. Try to see how you can get bigger winning trades with the trades that you're already taking, instead
Yes.
of trying something with a win rate, which is really hard once you have good entries overall. One thing I wanted to talk about with you, because we see this so often, performance by time and then looking at the hour of the day. It's so surprising how many traders have this really narrow window where 80% or 90% of their edge is probably here around 90,
Yeah. Well,
12 to 1 p.m. It's yeah, probably like 90% of his performance is here, right?
mm. But also most of his trades, it seems like 19 and
19,
32.
32, 13,
Wow.
5. Yeah. Well, we can see it here actually. 19, 11. Yeah, most of his trades are there, and 5, 6. So unless we have seen it with other traders, if you have limit orders, the performance by time is not. It can be interesting to see when your limit orders get triggered, but if you're a manual trader, looking at this, you can reduce your trading day from 11 hours to 2 hours. That's huge.
Yeah. Yeah.
And it's a
It's
pattern we
really good.
see in so many journals that we are going through, right?
Absolutely.
Traders
It's
feel that they need to trade a lot, but
yeah, totally. Especially when you are trying to pass a challenge, or I don't know, you're really eager to get out of your corporate job, or you think that you have to trade more to make more money. All of that is completely wrong motivation to take a trade. And typically less is more. Also, when it comes to amount of setups, amount of instruments, amount of time in front of the charts, less is usually more for most people.
yeah. Yeah, there's a lot that goes into this. Also, probably a lot of traders think that they need to sit in front of the charts to justify that this is actually a real job, but that's not
Yes.
how trading is actually working. So super interesting here once again, to see this type of performance here, in this
Hmm.
very narrow window of time. But overall, I think this is a very good journal. Obviously, he's on the right path. His process has improved significantly. He's doing well. He's listening to the feedback and eager to implement it. So super nice follow up. Again, I would be really interested to do this in another 3 months to see how he's doing. I would
Hmm.
definitely follow up with a trader to see if he wants to dive us into the journal once again in a few months, see where he's at, and then we will come back to another review.
Awesome. Looking forward.